afternoon, and thanks for stopping by Across the Fence. I'm Keith Silva. I want to begin today's program with a personal question. How's your 401k these days? The tariffs imposed by the Trump administration have played havoc with investments and will likely continue to do so. But if this topic is a little outside our usual lane, our guest emailed me and asked to come on and talk tariffs, investments, and financial advice, and I was reminded of that old E.F. Hutton ad campaign. And so, when One Day in July talks, we listen. Dan Cunningham is the founder of One Day in July, which provides personalized investments for individuals, families, and institutions. One Day in July works with clients across the country and has 4 offices in Vermont. Welcome back. It's good to see you, Dan.
Thank you. Good to see you.
Tariffs and investments. Talk to me. What's on your mind, and more importantly, what's on the mind of your clients?
Well, there's a lot of things on people's minds, which is part of the problem. It's just been a whipsaw month in April. You know, we're seeing a little bit of relief in the market now, but people are anxious. I mean, it's definitely a time where there's concern. Why is the market swinging like this so radically? And you know, when people's retirement and 401k is hooked to that, it's anxiety producing. It's anxiety.
We're going to have some advice later on in the program, so stick around for that. Tariffs are a tax on an imported good, a fee. What does that have to do with investments?
Yeah, that's a good question. I mean, they're a fairly regressive tax, honestly. I mean, but they are definitely a tax. There's no way around that.
Sure.
And the issue is investing is a reflection of what the tariffs are doing to America's businesses. And so when somebody comes in and creates a tariff, you have a third party making decisions in an economic transaction, and that's fundamentally not efficient. That is very anti-free market. You have somebody else telling you what things are worth, who frankly really has no idea between the buyer and the seller. And so businesses then have to deal with that. Okay, somebody else made a decision on what things are worth. We don't necessarily think that as the business. And that creates a drag on the economy. And then as business degrades because of that, the stock market and investments reflect that.
So when we had you on before, you made it very clear, investment is literally an investment in a business. You're buying a piece of a business. So if Mom and Pop Co. or Walmart, doesn't matter. If you've bought into that business and that business suffers, your investment suffers. That's my very simplistic in economic.
No, that's definitely investing. How you want to think about it.
Okay.
Question.
So markets go up, markets go down. These things happen. Why is this different?
Well, we haven't seen it, for 100 years at this level. I mean, hitting the system with a tariff shock, which almost no economists actually agree with. That this is a very, very small group. This is not a mainstream idea. Really caught the system by surprise. Actually, I think probably most business people, even those who supported Trump, probably didn't really think that he was going to go through with this at this level. And in addition to the economic damage that it created, you also have this issue of uncertainty and surprise, and businesses don't like that. Markets don't like that. Yeah.
Uncertainty, not good for markets and business. We're recording this on May 15th. If we had recorded this on last week, May 7th, if we had recorded this April 30th, we would be telling a different story. And who knows what will happen by the time this airs. I thought we had fixed the tariffs. Aren't we done? Are we done with this thing?
Well,
no problems?
It seems like they're pulling back some. It hasn't gone away. I mean, fully. You have probably this summer, you'll see, especially with small businesses, I mean, they don't necessarily have lots of options for suppliers. Most small businesses have 1 or 2 suppliers, those that are importing, that's often in China. They can't just pick up and move production to the United States, which is another country. And so the damage there is going to be real. You'll see that coming over the summer.
So regardless of what we hear in the news or what, trying to keep politics out of this, but whatever your politics are, these tariffs and what has happened so far will affect businesses in the future. We'll feel it this summer, probably fall and on into winter. This is not an issue that's going to go away regardless of what they say in the news.
That's right. And this is just not selling with Americans across the board, because the problem is it's hard to sell something to someone when they go to work every day and see how difficult it is. Like, you can't convince somebody of that by telling them, because they show up and they say, well, we have no products coming through supply chain.
Right.
So that's why it's just not, this isn't getting any traction for the most part with Americans. And I think what is good news is people are appreciating free trade and free markets. Like, that message has gotten across big time to everybody in the United States of how valuable free markets are.
One of the things I heard, and again, you're the gourmet here, not me. These tariffs are upsetting the bond market. What is the bond market as opposed to in me investing in a business?
Yeah, so the bond market, in this case, a lot of the references have been to the Treasury market,
Correct.
United States government debt. But there are multiple factors going on. Probably the main one that affected the bond market is tariffs are inflationary. Mm-hmm. And when the bond market senses inflation, it suffers as a result. And that's probably the main driver of what you've been seeing in the bond market. And so that was a bit of a double whammy. I mean, the Treasury market in 1 day in July does have a lot of Treasury positions because
Sure.
they tend to be safer than corporate positions
Right.
or state bonds even. But it held up. It actually did go up, mm-hmm. but probably not as much as people would have liked to see. But the Treasury market did rise in April, actually. It offset the stock market.
I'm going to lean into something here that I probably shouldn't, but nonetheless, here we go. So I know that you're in the business of making your clients
I
money.
love lead-ins like that. It's where it gets interesting.
It's where it gets good, yeah. Apologizing for about to ask a question. What's wrong with the markets just being okay? We've lived in boom times. The stock market, I mean, if you look in the newspaper, the stock market in the 1990s, everyone thought, oh, it couldn't go any higher, and it's tripled and quadrupled that. What's so wrong if the markets are down or just okay rather than in a boom?
Well, yeah, I mean, I think part of it is, unlike decades past, the percentage of Americans' retirement that are tied to the stock market has risen. So that's really important. Secondly, the government has an enormous number of liabilities to pay. I mean, they don't use the same accounting as businesses do. If they did, it would look really bad. And fundamentally, it's a bit of a Ponzi scheme with all the liabilities that have to be paid. They need the markets to go up too. So like all of these things are hooked to America's economic system. The markets aren't going to go up if the economy doesn't grow.
Okay.
And so it all ties together, but that's one of the reasons why you see so much more attention on the markets, I think, today than you probably did 30 or 40 years ago.
Okay, because everything is now so tight. As they were saying, the global supply chain, you're not just getting things. It's not that you can start a business or a factory in America to replace a factory that got shipped out to China just simply because that's not the way the world works nowadays.
Right. Yep.
We've got about 5 minutes left. I'm wondering, from an investing point of view, investments are always like, buy low, sell high. So with tariffs, is there a way to sort of take advantage of that and find a company that maybe isn't, they're all going to be affected by tariffs, but find a company that maybe is smaller that you can invest in that nobody's looking at right now? Is this any chance for opportunity?
Yeah, there are chances for opportunity. And there definitely, there are companies that build everything in the United States that will benefit. I mean, demand will flow to them. Mm-hmm. And so they're often highlighted as they're benefiting, they're creating American jobs and things, and they have a really pure supply chain. It's just American, or it's a service that doesn't really have dependence on overseas trade. The problem is, like, you get one step away from that business buys something from another business, and that other business does have all kinds of dependencies around the world. And I think that's just one of the beautiful things about a free market environment and free trade is, people find the best products and services. And it does have the side benefit of when people trade with each other, they also don't tend to fight with each other.
Right.
Trade creates peace. It is a big driver of peace.
As we said, I'm not the investment expert at the table here, but I do know one thing about investments, and having talked to you before, one is make sure your investments are fiduciary. That's a good thing.
That's definitely a good thing.
And the second one is don't touch your money. Leave it alone. Is that the advice that you're giving your clients now? I know things are crazy, but stay with it.
That's definitely the advice. You want an investment program that considers these types of effects before they happen. You can't react after you see the news. It is not going to help. The market has already anticipated that. I think the really critical thing, though, is to, instead of focusing on the market going up and down and money you may have lost or made, you want to focus on what you can control. For most people, the vast majority, the fees they're paying to the financial industry are far more impactful than all of this tariff news.
That's something you can control.
You can control that. You can go look at your statements, start to figure out, talk to someone like One Day in July as a fiduciary, say, why am I paying these people so much money if they can't beat an index fund? Which is generally the case.
Right.
People pay lots of money to the financial business to underperform.
Right.
Not always, but that's what we have seen generally. You can control that instead of worrying about the news. Focus on those types of things.
Focus on those things that you control. Got about a minute left here. End of the day, is this about a fear of inflation and recession? Or is that what all this, financial agita is about? Is, oh, please not a recession, please not a recession?
Yeah, I think those are fundamentally two things that worry people the most. I mean, inflation is your biggest enemy as an investor. It's been a long time since we've had a real recession. We're going on 16 years. And so people aren't, they do fear a recession. I think, trying to look at a little bit of a silver lining, one thing that all of this tariffs discussion has done, it's been a bit of a unifier in the United States. You see a lot of people from different political parties and backgrounds actually agreeing. Not everyone, but there does seem to be a coming together, which is that is a positive.
Well, Dan, thank you very much. I really appreciate it. Always learn a lot in talking to you. Just don't touch your money. Just let the experts handle it. Keep it where it is. Really appreciate the conversation. Thank you.
Sure. Thank you.
That takes care of our show for today. My thanks to the crew behind the scenes here at WCX, who are always a good investment. I'm Keith Silva. This is Across the Fence. Thanks for stopping by.